Real estate in Germany is kind of a catch-22. If you visit a property that you'd like to buy, the real estate agent is most likely asking for a financing confirmation from your bank that shows that you can afford the property. And if you ask the bank for this financing confirmation, they'll most likely tell you that you need a property first before they can evaluate if they want to finance you or not. What the f are you supposed to do here? Like, really, where do you start? How are you supposed to know how much real estate you can afford? What's your maximum budget? Our 3 rules of thumb will help you with that. Rule of thumb number 1 is looking from the saving side of things. If you want to buy a property here in Germany, you have to pay fees and taxes. 2% fees for the notary plus 3% to 6.5% in ground taxes. Both of those are mandatory and cannot be avoided. On top of that, you might need to pay for a real estate agent if there's one involved in the transaction. That's roughly 3.5%. And that quickly, we have about 10% in fees and taxes that come on top of the property value. And as of right now, it is very, very tough to convince a bank to finance these additional purchasing costs as well. You should have these in savings. So check out video number 10 of our Real Estate in Germany series that shows you the best ways to save for real estate. Rule of thumb number 2 is the liquidity approach. How much can you afford to pay the bank on a monthly basis? Your bank payment usually consists of 2% principal, that is you paying the loan, plus interest of course. Let's be conservative and calculate with 2% interest rate. 2% principal plus 2% interest is 4% bank payment every year. So every 100,000 euro loan will cost you 4,000 euros a year or 333 euros a month. And lastly, the regulatory restriction that a bank is only allowed to give you a loan if you have a realistic chance of paying the money back. And that is mostly determined by monthly net household income. Almost all banks will give you a loan 100 times your monthly net household income. With 105 times, some banks start dropping out. 110, 115, 120, more and more banks will drop out as you have less and less chance of paying them back. Now the last question is a big one. Which bank is best for you? Which bank should you finance with? There are more than 500 banks in Germany and all of them have a different region, different focus, different risk they like to take. There is no single best bank. That's why you can book a free meeting on our website perfinex.de and we will help you find the best bank in Germany for your individual situation.